In recent years, a phenomenon has occurred that few could have predicted. The Spanish economy has managed to grow more than the countries with the largest economies in the Eurozone, such as Germany, France, and Italy. Thanks to this very strong growth, GDP per capita, or the average income of Spaniards a year, is higher than that of the Japanese, something that a few years ago was seen as difficult to achieve. Of course, the tremendous devaluation of the Japanese yen is at play, but that's a story for another time. In this video, we'll review the causes of this growth, look in more detail at Spain's economic growth in recent years, and try to analyze whether, as BlackRock suggests, the Spanish stock market still has significant appreciation potential. Let's begin by reviewing how it's evident that for the past 2 years, the Spanish economy has been growing more than most European countries, so much so that Spain's growth contributed nearly 40% of the increase in European GDP the previous year. In exact figures, Spanish economic growth was 3.2% annually, compared to 1.1% in France, 0.5% in Italy, and a 0.2% decline in Germany's GDP. These figures even led the renowned magazine The Economist to highlight Spain's economic performance, naming it the best-performing economy in the world in 2024. But the growth momentum has been sustained in 2025, allowing the Spanish economy to grow 0.6% in the first quarter, well above countries that have historically had better growth, such as Germany, Italy, and France. Of course, if we review the panorama in detail over the last 35 years, the Spanish economy has shown growth of 202% since 1990. While quite positive, this is far from true economic miracles such as Poland and Ireland. On the other hand, according to OECD estimates, Spain will continue to lead the economic growth of major European economies in 2025 and 2026, achieving growth rates of 2.6% and 2.1% respectively, once again far surpassing its large European peers, such as Germany, France, and Italy. Similarly, if 2019 is taken as a reference, Spain achieved the second highest cumulative growth rate with 8%, surpassed only by Portugal, and far above economies such as Germany, which grew only 0.3% in 5 years. Of course, we must not forget that the Spanish economy was one of the hardest hit by the health crisis in 2020, falling by 11%. But what is truly interesting is trying to review the causes of this extraordinary recovery and analyze whether this growth can be sustained and whether it opens the door for the Spanish stock market to continue to have significant appreciation potential. The first reason for the economic upswing is the excellent performance of the tourism sector. To get a perspective on the size of this sector and how Spain is one of the world's tourism powerhouses, we only need to look at some figures. In 2024, the Iberian country will welcome nearly 94 million tourists, ranking second worldwide, surpassed only by France and far behind countries like the United States, Turkey, and Mexico. Each tourist entering the country spends an average of 1,400 euros. According to the Spanish National Statistics Institute, cumulative spending by international tourists last year reached $126.3 billion, representing a 16% increase compared to 2023 figures. The number of visitors also increased by 10% compared to 2023. Expectations for 2025 are also very positive, and the sector is expected to contribute more than 20% of the expected economic growth of the year. This extraordinary growth in visitors and revenues, in addition to the dynamism of the entire sector, also boosts other economic sectors, such as construction and agriculture. The tourism sector is already consolidating its position at 13% of the total economic weight, managing to regain its share after the tremendous decline in 2020 due to the health crisis. Behind these figures lies some competitive advantages of the Iberian Peninsula. It is no secret that Spain and Portugal arguably have the most favorable climatic conditions in Europe for the tourism sector, with beaches that are the envy of their northern neighbors. Likewise, their gastronomic offering is positioned as one of the best in the world, boasting a variety of dishes that, compared to other countries, feature fresher and less processed ingredients than those available in nearby countries. And while security indicators have deteriorated somewhat recently, it still offers significantly better indicators than even those of the United States, allowing foreigners to visit the country without the high security risks of African and Latin American countries. Likewise, Spain offers tourist destinations with different characteristics, allowing tourists to choose between environments with more cultural and historical focus, as well as others where the beach and leisure activities prevail. The tourist infrastructure is also quite developed, with a wide range of hotels with high standards of quality and service. Another reason for Spain's economic boom is related to the increase in migration from other countries, which has allowed the country to increase its population by almost 3 million people in the last 7 years, despite low birth rates. The percentage of foreigners living in Spain is already 14% of population, reaching approximately 7 million people. By 2024, the main countries of origin will be Colombia, Morocco, Venezuela, and Peru. While there's resistance to this migration phenomenon in some political and social sectors due to problems of insecurity and disorder generated by some migrants, the truth is that the labor force that arrived in the Iberian country provided workers in key sectors of the economy, such as hospitality, commerce, construction, and agriculture. A report by Free Market Corporate Intelligence estimated that migration was responsible for economic growth of nearly 12% over the last decade. By 2023, it is estimated that migrants will contribute 0.7% of economic growth. This contribution is significant because 80% of the migrants who arrived were of working age, which helped offset the decline in the average working age of the Spanish population due to its aging. The contribution in key sectors such as hospitality has been fundamental, as, for example, 45% of salaried cooks had a nationality other than Spanish, as did 49% of kitchen assistants, who were foreigners. In sectors such as construction, foreign workers have increased from 25% to 44% in recent years, allowing for a generational shift. The image shows how the contribution of foreign workers is also significant in domestic work and elderly care. One of the sectors that has experienced excellent growth and benefited from foreign labor has been agriculture, which had the highest growth rate in 2024, with an increase of 8.3%. Another reason for the excellent economic growth has been the low cost of energy and electricity, which, in the case of Spain, is below those of so-called industrial powers such as Germany and France. Thanks to the greater dependence on renewable energy, with a limited share of Russian gas, combined with low oil prices, this has helped to keep inflation under control and lower production costs for industries. Among the drivers of growth are consumption and investment. In the case of household consumption, growth above 3% was consolidated for 2024, allowing for the reactivation of domestic demand for goods and services. This growth in consumption was largely due to a 5% increase in disposable income of Spanish households in 2024, driven by controlled inflation and rising GDP. Investment achieved growth rates above 4% in 2024, thanks to population growth and the reactivation of a key sector for the economy, construction, which is expected to grow at a rate of 3.5% in 2025. The construction sector is key to job creation and has grown thanks to the increased demand for housing due to migration and the needs of the tourism sector. The construction sector is even expected to grow by nearly 4% in 2026. Another sector that has achieved good growth is the industrial sector, which has managed to improve its production levels and is expected to grow at a rate of 2.3% in 2025. For some analysts, the recent economic success is also due to reforms implemented in the past that allow for lower labor costs, boosting the labor market and boosting the country's competitiveness. It should not be forgotten that, during the 2008 financial crisis, unemployment levels in Spain reached 25%, one of the highest in the entire European Union. Looking ahead, although the tourism sector may already be reaching its peak, there's a global trend where new generations are prioritizing spending on new experiences and travel, as opposed to purchasing real estate or durable goods, which will allow the tourism sector to have significant potential for the coming years. In the global economy, the service sectors, which are the foundation of the Spanish economy, are increasingly gaining ground. The share of the services sector worldwide has increased from 53% to 67% over the last 50 years. Another advantage of the Iberian country is its low trade dependence on the United States. Although President Trump recently threatened to increase tariffs on Spain if President Sanchez did not agree to increase military and defense spending, the advantage is that the Spanish economy's main trading partners are its European neighbors, and the United States ranks sixth, with only about 5% of the trade share. These positive growth prospects have led the International Monetary Fund to project that Spain's per capita GDP will reach $42,300 by 2030, once again surpassing Japan's, which will reach a figure close to $41,700. However, the recent success of the Spanish economy has had its negative consequences, as housing prices have risen sharply, even at rates exceeding 20% annually in some cities. However, there are still many challenges ahead, as youth employment remains high, and the national budget allocated to pensions is quite high. Finally, fund manager BlackRock, one of the largest and most important in the world, has included the Spanish stock market among its favorites for the coming years. However, the Spanish stock market has already performed excellently this year, with a return of 42%, making it the fourth best-performing stock market in the world. It's much higher than the U.S. stock market, which only achieves a 5.5% return. This also takes into account that the dollar has lost nearly 16% against the euro this year. Currently, the earnings multiple of the Spanish stock market stands at 12 times, which, while some above the 10-year average of 11.7 times, is well below the nearly 21 times global average. These multiples are under pressure from the U.S. stock market's multiples, and also well below the 17 times average of stock markets in developed countries. Leave your comments if you think the Spanish economy will continue to grow and that its stock market still has interesting investment potential. In an upcoming video, we will likely review some Spanish companies that still have quite striking multiples. Remember that in the video description, you'll find a link to the best course for learning technical and fundamental analysis for investing in stocks. You'll also find a link to the best platform for buying stocks on the stock exchange, regulated in the United States. If you enjoyed the video, give us a like, subscribe to the channel, and share the content.